let's say I take this trade tonight, which I might do. I might do it as we get off stream. Okay, but I say, well, the Euro news is going to come out tomorrow. When I'm back testing, I don't know what news is coming out. Right? When I was back testing all my pairs, I didn't know what came out. So for me, after I went through all that whole process, it's like, if this ends up going down and I don't take it because I'm worried about that news, and maybe the news negatively affects the Euro and it goes kaboom down to the downside, I'll be annoyed with myself. So yeah, I'm probably not the best person to ask about the fundamental, but yeah, they're definitely on smaller time frames. It could do anything. Could do anything.
Can you look at Euro New Zealand? I shall do so, sir. I just need to look at CAD yen because Tommy asked for it, and I was planning to. Ooh. That was my happy dance. Happy dance. Happy dance. So you know it is. Yeah. Okay. I will behave. Okay. So now we have a higher high on CAD. Happy dance. Happy. Okay. Right. So now we have a higher high. That's great. You know. I like. Well, it's not a higher high, but you know, it's something that I can work with at least. So for tomorrow, I'm looking for 90, 95. Are you a seller here? I was indicated for everyone today. I am very happy today. Yeah, that is what I would do with this one if I was a seller. Okay, that is what I mean. And my point here is, if I was a seller, check out all my shenanigans. People are like, I mean, you have such a, what do you call it, basis charts. Here with this price action, straightforward, okay? If you are a buyer, you're thinking, well, that's a double bottom, in it, on top of the double bottom, in it, and that's a higher high, higher low. There is your first potential buy. If you took it, that is up to you. The next one is the next pullback. The next one is the next pullback. The next one is the next pullback. Now, I'm gonna do what I almost always do, but I'm gonna say it anyways. If you take any positions in the market, please, for the love of God, have a stop loss. Please, have a plan. Please, don't listen to whatever I'm saying. I might be wrong. I'm not here to tell you what will happen. I'm telling you what can happen, and if it doesn't happen, I have no liability. It is definitely you who have to take the responsibility for your education.
Now remember, when price gets to this level, what's going to happen? We're going to start seeing this is what's going to happen. Price is going to do this, and then it's going to try to pull it back. So you take your profit right here, get out of that trade, and now you look to get back in on this trade right here. Right? When it comes back here, you get back in again. You make your profit going up again. You get out. Now, when it gets up to that fifth wave, you're going to get a deeper retracement move. Then you can go to a 4-hour time frame, and you'll see a much smoother swing that you can trade with a low and high. And then you can go ahead and look for that retracement and look for a much higher target to the upside. So this is what you do. For those that don't have a strategy, right? So what you do is this. You start off with a 15. If a 15 doesn't look good, you go to the 1 hour. You trade that swing. When that swing is completed, a 5-wave structure, then you move that up to the 4 hour. And what's going to happen is the 4 hour is going to have a swing just like we have like this, because every time you add, every time you take away candles, you're building up a more smoother swing, high swing low. And so you on the 4 hour, you'll have a swing like this. Then you're looking at the market retracing on a 4 hour. You'll have a much higher target on the 4 hour. So you extend your targets, you increase your profit potential, but also you got different swings. So if you thought that a trader cannot trade one currency pair and make a whole bunch of money from one currency pair, you are mistaken. You don't have to trade 28 currency pairs, all right? Now, if you want to diversify your risk across the board, that's fine. But in order to be successful in trading, you don't have to pay attention to 100 currency pairs, all right? You just need to go ahead and pay attention to 1 or 2 and become a master of those and trade different time frames. I call it a gear up, gear down trading approach. And so what you're doing is you're just gearing it up, gearing it down, and you're trading different swings.
I've been trading for a minute. Small lots are the way to go. And small lots, doesn't necessarily mean small lots in general. It means small lots relative to your account, right? My lot size might be significantly bigger than yours, but it might still be a small lot size to me, right? Because again, I might have more deposited, and that's fine, right? We're all on our own particular financial journey. If you have a smaller account, there's nothing to be ashamed of. It's just, where you're at. So as time goes on, you hope to grow that account and make it bigger and keeping your risk management very small. But again, those lot sizes staying small is probably one of the biggest secrets that nobody knows about in Forex. It's a secret of Forex that people don't really realize unless they do Forex for a long time, right? Most people don't ever figure that out. The key to staying in the game long term is small lot sizes. I mean, that is absolutely, without a doubt, 100% the game-changing realization that I made as a trader.